Domino shares moving to the upside. Look at that, a jump of just about 8% after reporting a 2.8% jump in U.S. same-store sales from a year ago, boosted by its partnership with Uber Eats. Now, the pizza chain is also doubling down on its loyalty program after grappling with the slowdown in sales at the beginning of last year. For more on these results, we want to bring in Peter Saleh. He's BTIG's Managing Director and Restaurant Analyst. It's great to have you here. So let's talk about this strong report here, at least at what it looks like from Domino's. You got shares hovering right around that 2-year high. What do you think these results tell us about some of the momentum that we're seeing play out in Domino's business?
Great. So thanks for having me on. Yeah, look, I think it was a good quarter. The important points to note here is they beat on same-store sales. They beat on the bottom line. The same-store sales are being driven by growth in transactions in both carryout and delivery. So both of their biggest segments, both driving positive transaction growth. And this is really before the impact of the Uber Eats partnership, which really kicked into gear in the new year in 2024. So you're seeing already an acceleration of same-store sales and traffic and beats on the bottom line before you're getting any benefit from Uber Eats. So I think there's a lot more to come in 2024 as they leverage the Uber Eats partnership.
What does this say about the tech dominance that Domino's has really put forward, not just to investors, but to some of those core customers for the better part of a decade plus now, and the investments that they still need to make sure that they kind of continue to maintain that, that particular title, if you will?
Yeah, no, they continue to make investments on the digital side, as all restaurants are doing going forward. I think Domino's digital mix right now is between 80 and 85%. That's best in class. You gather, not only are you growing sales with more digital sales, because that's how the customer wants to order, but you're gathering a lot of information around the customer, which really informs your advertising strategy, your menu strategy. So it is a very important piece of their business. But like you said, they continue to invest. They'll continue to invest in 24 and 25 and many years beyond as they grow that digital mix and trying to get it to 100%.
Peter, a bit of the slowdown that we're seeing in the overseas business, obviously very similar to some of the rivals, some of their competitors out there. How big of a headwind do you see that remaining for as you look ahead to the rest of 2024?
Yeah, that's hard to tell right now how big and how long that headwind is going to last. I mean, they called out France as one of the issues over in Europe and obviously the Middle East. I think they're both related. There's some negative sentiment going on for Western brands in countries like France right now. We'll see when that turns around. I think, obviously the war has a lot to do with it. Really don't know when that's going to turn. I think the story right now for Domino's is really more around the U.S. business and the growth that they're seeing there, as that's been challenging for the past several years.
How much do you think that they still need to insert promotions into the U.S. business strategy, given that consumers are trying to value hack wherever they can right now?
So look, they've had really strong promotions and really strong value for as long as I can remember. They started with $5.99 mix and match. Now they're at $6.99. Their value proposition is very strong. It's more about how aggressive they advertise it. Right now, they're advertising more pan pizza and more bundles. I think as we go through the year, you'll start to see them pulse back in on the value proposition as well. So I think it's more about advertising, but their value proposition is best in class and will continue to be so going forward.
Peter, when it comes to the biggest headwind that you see facing Domino's, obviously inflation has had a real impact on their business. They've been able to offset it a bit in terms of pricing. Is that a strategy that you think is going to continue to be as effective going forward? Yes, inflationary prices are easing just a bit, but the consumer is also being a lot more discerning in terms of how they're spending their dollars.
Yeah, so inflation has been a struggle for all restaurants and Domino's, really some commodity inflation, but also wage inflation. I think the one that continues to last is the wage inflation. They're calling for mid-single digit wage inflation again in 24. That's on top of significant in 23 and 22. So I think inflation is here to stay. But keep in mind, if consumers are looking for a value and ways to leverage their dollars, really there is no better way than the pizza category. And Domino's is the leader on value. So you could feed a family of four for $25, $30. You struggle to do that in any other QSR or any other restaurant out there.
Wawa would say, hold my beer. Peter, Saleh, thank you so much for taking the time here on the day. Certainly do appreciate it. Talking all things Domino. All right, great. Now I'm hungry again. It's 9:48 a.m. Thanks a lot, Peter. We'll talk soon.
Thank you.